Hello, everybody. My name is Christian Charlo. Welcome to this market report. Today, we're Thursday, July 23rd, 2015. Today has been a day of correction on the markets, though. But what I want to do in this chronicle is to make a follow-up on the last market chronicle. On the last market chronicle, I've told about the situation in Greece where a first package of reform has been passed by the Greek parliament. Today, a second passage of reform has been passed, and those are preconditions that will allow the Greek government to eventually have access to negotiate $86 billion bailout package. So this is some good news. But today on the markets, though, what we actually have is a correction, and the correction is due not because earnings are not great. Actually, most companies have beat estimates, but a lot of those companies, there is some key metrics that are not so positive. For instance, here Apple, they did beat estimates yesterday when they released their earnings. However, the sales of the iWatch has not been in line with estimates, has been kind of disappointing, and this is why Apple actually allowed the Nasdaq to start a correction yesterday, and today the correction of the Nasdaq continues. If we take a look at this also, the SPY pursues its decline as well. Actually, we have one stock, Caterpillar. The stock did beat estimates. However, they're lowered their guidance for the future. So this is actually something that kind of worries investors, and this is why we have a massive sell-off on a stock like Caterpillar, which is continuing to pursue its decline. On the TSX, we also have the pursuit of the decline as well. We had Tech Resources. The stock actually did beat estimates. However, what happened in Tech Resources is that the company didn't have a growth in its sales. They have a tough coal price environment. So even if they did beat estimates, some key metrics were not in favor of investors being bullish on a stock like that. And this is why that stock continues to maintain its downward momentum. So earnings are beating estimates, but so far they remain disappointing in terms of some key metrics. This is why the correction continues. Now, if we make a follow-up on the last market report, I've talked about a movement that we had in the utility sector. What I said in that movement when it started a bullish cycle here, there were two risks. First of all, the risk that the Fed might raise interest rate, right? And the upward potential from the beginning of that bullish cycle until that former resistance was limited. On most stocks, you had a 2 to 3%. Hence, what I said on the last market report is that you needed to have a medium to long-term horizon, which means that if you bought some positions here on the utility sector when the sector broke out, well, your support should not be here because that's in the short term. But if we consider the medium term, we could consider the support towards June. So the pursuit of the decline that we have in the utility sector today is only due to wrong reasons. The initial jobless claim data that came out, actually it's one of the lowest level since 1973. And this is actually giving more ammo to the hawk people in the Fed to actually raise interest rate this year. You know, the utility sector is an interest rate sensitive sector. So the stocks have showed, so this is why the utility sector today in the US is in a clear bearish cycle heading towards its bottom of June. Now, if you bought some positions that I've mentioned last week, such as Edison International, which broke out on July 16, so far you should hold on to it. There's still that support that's there. And also there's still that support that's at 55.35. So this is the point where you're going to have to close all your bullish positions, and you're going to have to actually be patient on that a stock like that. NextEra Energy did break out also on July 16, has a correction, but take a look at NextEra Energy. We have a lot of congestion there around 101. There's a lot of moving average that are meeting there. So this is a point where we might actually either have a pause, because those are only an expectation that the Fed might raise interest rate following the initial jobless claims. There's a lot of metrics that the Fed members are going to take into account before taking that decision. And this is one of the reasons why today we have a decline, a general decline in the utility sector. Alliant Energy also as well has a correction. So if you bought it here, I think you should not get out soon, but rather get out below that support of June, which is around 57.38. Now, there's also another sector today that is taking a biggest hit, a sector that's also interest rate sensitive. It's the utility sector. And those are the best breakdown that we have in the utility sector. There's SL Green Realty, clear breakdown on that stock. And what we have favored on stocks like that to put them in the breakdown on marketgurus.tv that you can have access for free for 10 days just by clicking at the link below. We have favored stocks that at least are just leaving their overbought situation. So this is a stochastics here, a 950 stochastics. So we see we're still within the overbought situation, and we have some room to go before we reach the oversold situation. Hence, it means that today's breakdown has a chance to continue, and that could even allow SL Green Reality to come to retest the low of its upward corridor there, so towards 106. So there's not a 10% potential, and most of those breakdowns, the potential is kind of limited to 3 to 5%. But except on that stock here, Redwood Trust, that's our best pick on MarketGurus.tv, and this is a stock that we're putting in our analyst choice portfolio today. And the reason why on Redwood Trust is, first of all, it's a clear breakdown on that stock. To get out 16.25, so that's about 3% as a loss potential, 3.5%. The stock has a clear downward momentum that could bring it towards 14.84. So around 14.94, 14.84, that's going to be at least 5%. So there's the probability to take some profit on that stock. We have to take into account that this stock does distribute dividends. It's a REIT, of course. So if you're shorting that stock, I think in September they're going to distribute their dividend. On August 3rd, they have their earnings. So this is the risk aspect on a stock like that, where it might be negative for you who are actually shorting at that stock today. So we took that into account. And so far, with the low loss potential towards 16.25, 16.50, where we're going to get out of that stock, which is 3% compared to the price you paid, and the probability that the stock could pursue its decline towards 14.92, 14.84, that actually give us enough room to take some profit around 5% on a stock like that whenever it reaches our target of 14.84. Other stocks also are standing out. Empire State Reality, for instance, is one of them. If we take a look here at the stochastic, so far we don't have much room to go before we reach the oversold situation, but we could reach the low of this downward corridor towards 16.50. So this is really a short-term trade on some stocks like that. Spirit Realty as well. The thing is, there's a big support that's there towards 9.50. It doesn't make 5%, but you can make at least a 4% on a stock like that. And as your exit point, it's 10.30 above this resistance, and also which corresponds to the reversal of this downward trend. So those are the best pick, folks, so far. Our best pick of the day on MarketGurus.tv is Redwood Trust. If you bought some position last week on the utility sector, even with today's sell-off, you should not panic, because as I said, you need to have a medium to long-term horizon, because today this correction that we see in the utility sector and among REITs is only due on expectation that the Fed will raise interest rate following the low initial jobless claims. So this was Christian Charlo for MarketGurus.tv, that you can have access for free for 10 days just by clicking at the link below. You can always follow us on Facebook, on Twitter, chat with us, share your strategies, and never forget, the more money you make, the happier we are. See you next week.